It's really great to see tech coming back, because if we look over the 1-year period, not year to date, but 1 year, we're still dominated by return from utilities and REITs, which are outpacing all the other sectors by a pretty wide margin. So it's nice to see that tech is catching up here, and certainly that money is rotating back into these higher growth companies.
Yeah, Weiss, what do you make of this FANG resurgence? I mean, Pete talks how broad the tech move is, but FANG is back.
It is, and I was looking actually at valuations, and so I own Alphabet, and it's cheap. You look at it on an EBITDA basis, and it's growth, and it's as cheap or cheaper than some of the industrials that are out there when you look at it that way. Amazon, another one. I think I'm going to buy Amazon. I'm waiting for a pullback, but that company is cheap. Forget about earnings. To me, EBITDA, cash flow is the real valuation, so I like it. So, look, this is really the kick the can down the road derivative trade, meaning that China, as long as there's not a China deal, but the dialogue is still positive, you have reason for it to lift. It's also a referendum on the economy, if the economy is in fact bottomed, or fears of the economy going lower into recession. I bought AMD, bought a little yesterday, bought a little this morning. I think that was really just to get exposure to the chips.
Speaking of FANGs, Josh, Facebook below its 200-day. Netflix has been pulling back, got a downgrade within the last week or so. But now Facebook's down 2.5% today.
Yeah, well, so I think it's important to remember that some of these stocks are not even considered tech anymore, and they're in the communications business. And Netflix and Facebook are now communications companies. They're not tech companies. And forget about the classification, just the mindset. People say they want to own tech. They might still think of those names, but what they're really talking about, in my view, is things like Alphabet and things like the chip companies and the software as a service companies. That is really what people have been reaching for this week. Not a lot of people have looked at this, but NVIDIA just had a 13% week. Apple just had an 8% week. That's in 5 days. The chips are up almost 6% this week. New highs coming soon. Steve mentions Amazon. I'm going to do you a favor today. Don't wait too long.
Yeah.
1725 has been. If you want,
I've waited 10 years, so I can be a little patient still.
Let's throw that chart up real quick, because Amazon is setting up for a major breakout next week, provided there's no catastrophic thing that happens over the weekend. 1725 has been resistance for a little while. It's been bumping up against that. I think if it takes out 1725, there really aren't any natural sellers here, and this stock could revisit the old highs and the biggest market cap in the world. One other thing I want to point out. One of the things that you want to see, if you think this is for real, is broad participation. We talked about the internals the other day I was on. I won't repeat myself. Let's look at the rest of the world. ACWX, that's the MSCI All Country World Index, ex-United States. So this is developed markets around the world. You're back to the October highs. A ton of technical damage has been repaired away from the U.S., and I think that's really supportive of what's happening here.
Yeah, it's interesting. You got a call from BMO today on Netflix and Amazon, since we were talking about that. They moved Netflix to its top pick, and they bump Amazon down to number 2. They're actually talking about this proposal, at least the conversation that Senator Warren is having about trying to break up big tech, and they say that thus Amazon will be in the crosshairs right there, so they take it off of their highest level.
Yeah.
They still love it. Okay, let's not go crazy. They love it, but they move it down to number 2, and they move Netflix up.
So I wrote an op-ed for thehill.com. It's actually out this morning about how we should think about the large tech companies getting broken up. And I actually think that the strongest case Elizabeth Warren made was the one about Amazon, way stronger than what they said about other companies. And their contention that we can't let somebody be an umpire and then a player on the field. We can't let Amazon own this platform and then also be selling things on the platform. Says who? Says who? So is it anti-competitive? Yeah, so go sell on another platform. If you want to treat these companies like utilities, they do not have any kind of status from any particular state or municipality or the federal government where they're treated as utilities in the eyes of the law. So I don't think that we're within 6 months or 12 months or 18 months of anything like that happening. So if you're making a downgrade of the stock based on a stump speech given at South by Southwest by one of the furthest left voices out of a field of 15 people who are going to run for the Democratic nomination, it's a stupid downgrade.